All right. Assalamu alaikum and welcome to another class of Advanced Audit Equivalence. And in this class, again, we'll be looking at the question Winberry from one of the past papers, right? And this is the 50-mark question, right? And in this question, we will be looking at the three requirements which is related to business risk, audit risk, and audit procedures. The other requirement will be looking into another audit. We'll look at it in another class. Okay. So before looking at the scenario, let's move to the okay. Let's start with it. It is 1st July 2005. You are the manager in the audit department of Coins and Co, a firm of chartered certified accountant. You are responsible for the audit of Winberry Company listed entity. It's a listed entity. We get our first risk, that is, it is a detection risk, right? An existing client of your firm, the company has a financial year ending 30th September X5, and you are about to start planning this year's audit. Okay, so the following exhibits information is relevant: partner's email and email which you have received from Olivia Peak, the audit engagement partner, meeting notes, notes of meeting with Olivia Peak recently attended with the audit committee of Winberry Company, focusing on understanding the current operation and future strategy of the business. Financial information, selected financial information from Winberry companies, management accounts, internet search, the headline result from an internet search performed by the audit. Okay, this information should be used to answer the question requirements. Blah, blah, blah. Let's move on. 40 marks requirement, 10 marks related to professional marks. So here is the first exhibit. So it is an email from partners. It is a partner's email. Audit manager to audit manager from Olivia Fake, the audit engagement partner. The subject is Winberry Company audit planning. Date is 1st July, Act 5. Hello, I attended a planning meeting this week with the finance director and the representative of the audit committee of Winberry Company, at which we discussed business development during the year and plans for the future. Okay. I have provided you with the notes from this meeting as well as some background information about the company from the permanent audit file. Based on the analysis I have done on this industry, it is appropriate for uh, overall materiality to be based on profit before tax, as this is a key focus for investors and providers of finance. Okay, now the requirements. Using the information provided in all the exhibits, I require to prepare the briefing notes for my own use, in which you evaluate the significant risks facing the company. 10 marks. Okay, so 10 marks means, okay, 10 divided by 2, that means you need to give at least 5 business risks to get the 10 marks. Okay, then second requirement, evaluate and prioritize significant risk of material misstatement to be considered in planning the audit for the financial year ending 30th September X5. 16 marks, that means 2 divided by 16 divided by 2, that means 8. You need to give 8 risk of material misstatements. And then finally, uh, design the principal audit process to be performed in respect of the classification of the investment in luxury pet supplies, LPS company, 7 marks, 7 audit procedures, right? And then this is the last requirement, which we will look at into the another class, and that is with reference to the data protection issue referred to in exhibit 2. Okay, Coins and Company responsibilities in relation to Winberry Company compliance with laws and regulations, 7 marks. Okay. So move on. Winberry company is a listed company operating as a retailer in the online grocery market. Okay. With a coverage of 75% of the country. The company has a loyal and growing customer base who place orders via either the company's website or application app, which can be installed on a computer or the customer's mobile phone. Winberry company fulfills grocery orders delivering to customers' home via a fleet of company-owned refrigerated delivery vehicles. Winberry company pride itself on having a market-leading inventory system. Okay, which ensures that customers can only order groceries which are currently available. This helps Winberry company customers avoid the inconvenience of ordering unavailable items. Okay, so here we get our first of the business risk. A significant proportion of the groceries supplied by the Winberry are perishable products. Okay, that the sale and storage of which is highly regulated through food safety regulations. Another, Winberry company employs experienced food and product technology professionals to ensure that the company complies with all food safety legislation. Directors, we got probably two business risks from here. The director of Winberry company are pursuing ambitious expansion plans in order to establish a strong position in the home delivery grocery market and to explore business partnerships in associated markets. Okay. Another, international expansion. Winberry company is planning to expand into the foreign country of Ireland by setting up operations similar to its existing business. Ireland using the same currency as Winberry company existing operations. The investment expected to cost 125 million. Another business risk, then Winberry company does not currently have the fund for this expansion itself, but is advanced negotiation with its current bankers who are keen to provide loan financing on the same basis. Covenant as existing loan finance, the expansion is expected to occur in 2006. So this is my business risk and this is my risk of material misstatement. Okay. Then data protection issue. 2 months ago, Winberry company suffered a cybersecurity attack in which the person information of 2,500 customers, including their credit card details, was stolen. According to a representative of the audit committee, which is requirement data protection legislation in the jurisdiction and with the summary, the issue which led to the cybersecurity attack has not been resolved. Winberry company did not make any reports of the breach of to regulators. Okay. The issue which led to a cybersecurity attack has not been resolved. Winberry company did not make any reports to the breach to regulators. So that's data protection issue. Again, it will get a business risk from here as well and risk of material misstatement as well. Okay. So far, so good. Now here are some analysis financial information we have. Groceries are extending, increasing drastically. Okay. 358 of 587 is the projected one. Pet goods is the new thing which was not available last year. Total revenue, then we have operating profit 170 to 110. Okay. PBT 31 and 53. Okay. Total assets 884 and 957, including in total assets. We have net assets that's consolidated relating to the subsidiary 60 and 0. Property, plant and equipment relating to damaged warehouse 67 and 70. Long-term borrowing 33 and 5. Number of subscribed customers 146 to 50. Last year's data is not available. Okay. Groceries revenue includes revenue earned for a new initiative launched during the year by Winberry Company. This guarantees a weekly delivery slot for customers who sign up for a premium delivery pass. The premium delivery pass is an annual membership with a fee of $60. This fee is invoiced in advance and the revenue is recognized in full at the time of invoicing. Okay, Winberry Company, that's our risk of material statement. Then Winberry Company has entered into a joint arrangement agreement with the Durango and is investing 30 million company, luxury pet supplies, representing 50% of the share capital of the company. The remaining 50% is owned by Durango. Well, from here we're getting the business risk as well as risk of material misstatement as well. Okay. So during company, a leading national chain of VATs and get food supplies. The contract behind this investment states that Winberry Company and Durango will work together to develop the supply of the range of pet supplies, food, toys, and accessories. This joint venture agreement utilizes the established online presence of Winberry Company and their distribution network and Duran Company existing knowledge of the pet goods supplies market. Both parties will have equal voting rights and equal rights to the net assets of the LPS company. As a subsidiary, the share of the results attributable to Duran Co. is shown as a non-controlling interest. 100% of LPS company revenue from incorporation is shown separately in the financial information above, owing to the Winberry Company full compliance with IFRS 8 operating segments. Okay. So the finance director believes that despite Winberry Company and Duran Company each owing 50% of LPS and equal representation on the board, Winberry Company contribution of knowledge to the joint venture is greater, and therefore Winberry Company should consolidate the investment. Another risk of material misstatement, and the claim of finance director is actually wrong. Okay, we'll discuss on it in the answer. In January X5, there was a fire in one of the Winberry Company 5 warehouses, which completely destroyed the premises. But fortunately, no staff were injured. Their warehouse serviced the northern region of Winberry Company customer base. The finance director has not written down the carrying amount of the of the warehouse in property, plant, and equipment, as he is confident that the company insurance policy will cover all the costs. The insurance company has confirmed that they will repay Winberry Company for the inventory loss during the fire. However, the claim for the warehouse building and machinery is still ongoing. Okay. Winberry Company was able to utilize their remaining 4 warehouses to provide coverage to the northern Indian customers. Well, this is very, 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 you can say, most significant risk of material misstatement. It is our most significant risk of material misstatement. Okay. Then this one. Okay. The long-term borrowing comprises a bank loan taken by the wind company to fund the joint venture of LPS company with Duranco and the purchase of electric delivery vehicles. The bank issued the loan on the same terms as their existing loan, which has a covenant that interest cover is maintained at 3. It is also a significant, but the number third one is the most significant one. Okay. Now, 3rd November Expo, keeping up with demand, Winberry Company ahead in delivery grocery revolution. The Grocery State Journal Perishable Planet reports that demand for online groceries has reached all-time high and no sign of slowing down. The traditional supermarkets cannot keep up with the demand, leaving opportunities for gains in market share for online operators. Okay. And then on 15 January, local residents to bring legal action against Winberry Company. A group of 30 local residents who claim their health was affected by the toxic fumes from the huge fire at Winberry Company Northern Warehouse are bringing action to claim for the compensation. Well, okay, this is the business risk, okay, but also the ROMM. It can be ROMM as well, okay. The local residents' legal representatives confirmed that they had served a claim against Winbury Company as they believe there were health and safety breaches due to failing in the sprinkler systems in bringing the fire under control quickly. Winbury Company Health and Safety Department has launched an investigation which concluded warehouse staff had manually overridden the automatic sprinkler system to prevent water damage to goods. Finally, on 18 Feb, eco-friendly vents caused delivery disruption for Winbury Company. Okay, this is solely a risk of material misstatement and can be business risk as well. Okay, it can be business risk as well. Now, a new fleet of 80 electric vehicles costing 50,000 each has cost delivery charge to Winbury Company loyal customers. The vehicles can only travel for 100 miles without requiring recharging, which has left customers experience delays up to 4 hours for their groceries. The eco-friendly vans were initially selected for purchase by management based on a suitable delivery range. However, at the request of Winbury Company, the manufacturer of the vans added refrigeration units to each vehicle, which has significantly reduced the distance the vans can travel on a single battery charge. End of the question. Now let's move to the answer. Right. Let's move to the answer straight away. Now, briefing notes to Olivia, audit engagement partner, same as before. Okay. From audit manager, subject audit planning in relation to Winbury Company, the introduction, and then introduction, simply what I wrote over here. Copy paste, evaluate the business risk. Then significant this briefing notes include evaluation of business risk, significant risk of material misstatement identified and prioritized, then audit procedures, and then finally laws and regulations, blah blah blah, like we did before, right? Done, dusted. Then materiality. In materiality, again, for the purpose of the briefing notes, the overall materiality level used to assess the significance of the identified risk is 4 million based on the profitability of the company as requested. All right, that's it. Then we have to give the justification. 53 million on 5%, we got 2.6 million, 5 million, then 5.3 million, the higher side. Then we will give the justification that we will use the lower end because of the various issues that they are going towards the joint venture and all. Uh, Also, the intention of the finance directors is not seems right in terms of the fund warehouse, and also we will be being skeptical, keep our materiality at lower side. Then evaluation of business risk. Damage to warehouse cause of fire is our first business risk. Now, what will say? The fire has caused the destruction of the warehouse servicing Winbury Company Northern customer base. Winbury will certainly incur higher costs to incur capacity at existing warehouse and more significant, more higher uh, about the cost by using alternative warehouse to supply this region. If there is a disruption to a service due to an interruption of grocery service, then this will cause a detrimental effect to the Winbury Company's reputation, which is likely to result in the in the fall in sale and profit. Okay, the damage to Winbury Company's business could be amplified by the fact that online grocery delivery is growing market and failure to adequately service new customers to could impact and fall of sales and profit. Okay, then so done with first business risk. We got the 2 marks. Then international expansion. In international expansion, what we will say that the expansion to far land introduce a business risk in that company will managing operations in foreign country for the first time. Foreign may have different laws and regulations, so there is a risk of non-compliance. There are also risks associated with Winbury Company ability to set up on overseas distribution network, including the uh, Winbury delivery vehicles and suitably quantified staff and comply with foreign legislation. Another 2 marks. Investment in LPS company. The joint venture represents a new method of expansion for Winbury Company and introduces a possible reputational risk. But it their own high standards in the joint venture. Any quality issues with products or delivery problems with LPS company could have repercussions for business, for Winbury's reputation, and this may consequently lead to reduction in sales. Another 2 marks. See, get the easiest marks first. Easy, 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 easy. Then loan finance. The dollar 125 million expansion into the far land is to be funded by loan finance. The additional debt financing will increase Winbury Company gearing and result in higher business risk to ensure that the international expansion is successful. Okay, and that the inter and that the interest bargain loan is covered without determined to the cash flow of the existing business. Winbury Company to existing bank loan, the covenant that interest rate cover must remain above 3. The expansion and additional proposed loan will therefore make it more difficult to maintain the required interest cover. And if international expansion fails, Winbury Company is at risk of defaulting on the bank covenant and bank recalling the loan. Right? Another two. So 2 to 4, 6, 8, maximum 2. One more needed. Eco-friendly delivery loans. The eco-friendly vans, sorry. The eco-friendly delivery vans have been noted as a causing delays of uh, up to 4 hours, which will cause inconvenience to Winbury company customers and reputational damage. Winbury customer value the convenience of grocery delivery, and a 4 hour delay would severely negate this perceived benefit. Winbury company would be likely to lose customers if the delivery delay continue, and therefore sale and profit would suffer, as well as company having to bear cost of refunds. The legal case being brought against Winbury by local residents regarding the warehouse, which was destroyed by a fire. It will cause a reputational damage when the media report on the case, and Winbury company is associated with toxic fumes and damage of public health. The result of the internet demonstrates that the case is already reported in public domain, and therefore reputational damage is likely to be. Right? So far, so good. We done 6 business mix race, and that means we are done with the 10 marks. And then we have the B requirement of evaluation of risk of material misstatement. Okay. Financial analysis. Firstly, revenue projected to increase by 66.8%, operating profit by 56.4%, profit before tax is going up by 7.7%. Okay, broadly consistent with each other. During the year, Winbury Company has premium delivery vans, right? This is not sufficient to explain. So, right, and total assets are, getting increased by 8.3%. Overly optimistic, giving that large warehouse was destroyed. Okay. Then warehouse fire, the most significant, as I discussed with you when we were planning into the question, the most significant risk of fire damage was warehouse, right? The damage to warehouse triggered to impairment review as required by IS 36. The finance director wrongly assumed that after insurance cover, it's not required. Impairment measurement by comparing recoverable amount which is higher of recoverable amount, fair value less cost to sell, or value in use. Okay. The significance of warehouse is not simply quantitative, but also an indication of potential management bias and impact of the judgment on financial statements. Okay. So far, so good. Now, investment in LMS company. The financial information shows that LMS company revenue is projected to reach 10 million this year. The investment is expected to occur in August X5. So based on this projection, the 10 million revenue is for maximum of 2 months, which is clearly above the determined materiality threshold. Winbury Company is also recognizing total assets of uh, you know total value of at 60 million, which is also in excess of materiality. It seems that investment is joint venture with control of LPS company. IFRS 11 says joint venture is a joint arrangement whereby uh, parties who have joint control of the arrangement have right to net assets of the arrangement. Joint venture recognize its interest in a joint venture as an investment and shall account. Okay. And then revenue recognition. So there is a risk. There is a risk arising from Winbury Company recognizing revenue from customers in advance of the revenue recognized. When invoice is sent to the customer, this is leading to early recognition of revenue. IFRS 15 requires that revenue is recognized when performance obligation is satisfied by transferring a promised goods or service to customer. As a premium delivery pass covers 12 months and the company is providing service over time, it can difficult to determine how much service has been provided and therefore the amount of revenue which can be recognized at particular point in time. Okay. it does not appear that the requirement of IR 15 are being adhered to, and there is a risk that revenue is overstated and deferred income is understated. The next one, the corporate governance. The recent cybersecurity attack could highlight that internet controls are deficient within the company, even though this particular problem has now been rectified. If Winbury company had not properly identified or responding to the cybersecurity risk, there remains the possibility that that there could be other areas which are deficient, leading to control risk. The issue also indicates audit committee is not appropriately fulfilling its responsibilities with regard to internal audit, which could indicate wider uh, weaknesses in the company's corporate governance arrangement and resulting in increasing risk of material misstatement. Pressure on results. The company is a listed entity and the shareholders will be looking for a results on their investment in the form of dividend payment, and there will be pressure to the company to show good financial performance, pressure to return a better performance on the incentive for management bias, which means that management may use earning management techniques or other method of creative accounting. And finally, audit procedures on investment. Here it is. Review board minutes to understand the business rationale for the investment. Okay. And to assess the amount of the control existent of joint control of venture. Then review minutes of the relevant meeting between the company and discussion to confirm control is shared. To then and understand the nature of the relationship and the decision making process, particularly if any party holds the right to veto decisions. Students, the third one, obtain documentation such as LPS company organizational structure to confirm company has successfully appointed members to the board of the company and that the members have equal power to the member appointed by Syrian company. So far, so good. Obtain a legal documentation supporting the investment and agree the details of the investment, including the date of investment, the nature of profit sharing arrangement between ultimately company and Durian company, the nature of access to LPS company assets under the terms of the agreement, control and communicate with the auditors of the joint venture if not coincident. Oh, right, so far so good. We are done till here, and I hope the techniques, like how to write the answer, how to deal with the questions is clear to you. We'll see you next time in the next class. Till then, take care. Bye bye.